Volatile is not that bad. It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even live advice.
Cheers.
Okay, we are live. Alive and alive. Let's see. How are you guys feeling? I just woke up like an hour ago, so I don't know what's the state of the market.
It's fine. It's just volatile. Yeah, just
Is it
had my morning
volatile? I
coffee
mean,
too.
like hype almost hit 50 again.
Yeah, the HIP3 I think is really well timed, and it's been doing very well for them. Even though I think quite a lot of protocols have been doing it, like Ostium tried it a long time ago. Mirror.
Oh, dude,
Luna,
did you see that?
tried it too.
Did you see that like CT thread? I'm like, I mean, come on, bro. Like, of course she knows what she's talking about. It's like,
Oh yeah, I mean, I
like
know her
all of
personally.
this,
She's
all of these
fine,
keyboard warrior.
yeah, the impression farming. I don't like that.
Yeah.
Personally met Caladora before. She's fine. She knows the product very well, and she's getting the hate for nothing. So,
Who?
yeah,
No,
What are we
it's
talking
the Ostium founder that like tweeted that
Oh.
if you long Nasdaq on unit, you have to pay a lot. But and then they were like, oh, you're actually getting paid too long. I'm like, yeah, of course she knows what she's talking. She's saying that it doesn't matter whether you're long or short. It's just like the fee is too much.
well, CT dramas can get a bit childish sometimes.
Yeah, I know, dude. But yo, like Twitter growth strategy is crazy, man. Like Lambro, like you should get your six pack back, bro. your college days.
Yeah, sure, bro. Let's take it. Let's take it out. You talk. This is harder than BTC breaking all-time highs, man. Shit. Like, bro.
I think you can do that growth strategy, Dan.
Nah, it's totally not Pendle style.
This podcast is brought to you by Zero-G.
AI and Web3 technologies has been a frequent topic in the industry. Zero-G is a layer 1 blockchain platform that aims to address challenges in decentralized AI infrastructure. To its website, Zero-G offers verifiable AI serving and scalable data availability intent for real-world AI workloads. The platform uses modular architecture designed to overcome specific bottlenecks in decentralized AI. Projects can adopt either the full AI stack or selective layers, with emphasis on scalability, cost efficiency, and trustless verification.
And they're not doing this alone either, backed by nearly 300 investors, including Samsung Next, Alumni Ventures, Bankless Ventures, and more, plus partnerships with heavyweights such as Chainlink, Solana, Optimism, Google, and even Alibaba. And to really fuel the ecosystem, the Zero-G Foundation has launched an 88 million growth program and accelerator with Web3 Labs, supporting over 1,000 dApps already in the pipeline. Oh, and the network, over 8,000 validators and 5,000 storage nodes, strong. So yeah, if you're into the future of crypto and AI, keep an eye on Zero-G.
All right. Let's just get right into it, right? Dan, before we do you want to do a quick intro?
Yeah, thanks a lot for having me, guys. Real pleasant to have a chat with you guys again. Anyways, hi everyone.
Thanks for
My
coming
name is
on.
Dan. I lead the growth team in Pendle. Been with Pendle pretty much since the founding days. And yeah, anything related to growth and marketing, it's usually within my scope of watch. And if you guys want to reach out to me, just feel free to hop into the Discord, and yeah, I should be contactable in our protocols Discord. I'm not too active on Twitter, but yeah, just
Probably wise
working
choice.
behind the scenes.
Got it.
You're
Got
saying?
it. Okay. Yeah. No. Like, I was just saying that it was like probably a wise choice for you to not to be super active. But anyway, yeah. Like, I think for the majority of our audience, because like we are quite DeFi native and we use a lot of products, and like Lambro in his group chat shared a lot of like farming alpha, just for context also that we have never met before. Like I run a market neutral DeFi fund, all of that. So I think we have an audience that's like really aware of what Pendle is. I think it's more exciting for us to maybe speak a bit more about your new product, right? Like I think that's less understood than like the existing like PTYT, all of that. So I think we can just like kickstart and sort of like, if do you have any I guess like
I'm not even gonna
teasers
lie.
or anything like that? Yeah.
I'm not even gonna lie. Like I feel ashamed when you say I farm a lot now, because like I was trying to use BOROS properly, and then I realized I'm just low key gambling, directionally trading it. But yeah, like this session is about me learning as well as like introducing to everyone.
Yeah, because
Yeah, yeah.
it's a more exotic product, right? So yeah, like I think our like audience would love to learn a bit more about it.
Yeah, sure. Well, it's exotic now, but we try to make it primitive in the future.
Yes.
I think before I get to the meat of it, Pendle V2 back then, we were talking to Lambro, since Pendle V2 was very, very young, we were exotic back then. And I think now we're
Yes.
at a point where it's everywhere. Anyways, in a nutshell, Boros is a yield trading platform similar to Pendle V2, but on margin. Meaning you have to put a collateral and then you can trade, funding rates or yields on the leverage. We start off by trading funding rates for now, mainly because it is the yield that that most crypto participants are exposed to, and in terms of OI and exposure, funding rate has a much wider net coverage than the entire DeFi. So figure that funding rate is a good place to start for us to trade yield. Also, even though everyone is exposed to funding rate is also extremely volatile. I think you can see in Lambro's screen, if you look at the underlying APR for BTC USDT, meaning the funding rate of BTC on Binance is currently negative, and you can trade this market. You go negative 10 or positive 10, trade this market. Will be pretty exciting. But in a nutshell,
Okay, so
process.
just to translate into degen tone, Pendle do funding rate because market size big and it moves quick enough, and then we like to do new shit and we're just not forking other stuff. That's the translation I got from on the on the chat.
It's very degenerate, but yeah, I'm not sure if I'll put it that way, but yeah, I think eventually, just going down a little bit deeper in the rabbit hole, right now funding rate, a lot of people are farming funding rate by basis trades with perps, and then Boros is actually a platform where you can hedge those funding rates. If you're familiar, we are basically an interest rate swap, but in crypto. How it works is exactly the same. And traditionally, you either buy the float side or buy the fixed side, where you switch your fixed payment to a float payment or float payment to a fixed payment, depending on which side you're at. Boros does exactly that. It's just that we figured that the lingo for an interest rate swap is a bit too complicated for crypto, and we kind of make things crypto native in like APR terms, and we turn this float to fixed swap into like a term called YU, blah blah. But that's more like in details of how you use it. But the idea and how it works is exactly the same of how a swap
Like interest rate swaps. Got it. Got it. Makes sense.
Okay.
Sure. I think you can scroll down a little bit. We can go to two different markets: ETH on Hyperliquid and ETH on Binance for the ETH collateral pool. So you scroll all the way down.
So I can see that you have two markets, like one which the maturity is tomorrow.
Which maturity do you want, by the way?
You can do the 29 days for Hyperliquid and Binance. Yep.
Okay, so there's two things here. First off, there is the underlying APR, which is what is the APR of, the funding rate of Hyperliquids right now, and then there's the implied APR, which is essentially what is the market price on Pendle of the APR right now. That's the two key things that you need to take note of. And then the second bit is,
let's take a quick pause. Wait, the implied APR is what's available on Boros, right? That's Boros market.
Yes.
Okay. Yeah, just for our listeners. Okay.
I'm not sure will this confuse people or make it better. As you can imagine, this is almost like Perks market a few years back when it first came out, where the Perks price can be different from the spot price, and then you are trading on Perk price, but you're referencing. You're trading on the Perk price, but you're referencing the spot price, hoping it would converge or assuming it will converge. But yeah, basically there's two price. One is the reference, which is a spot price, which is the underlying APR, which is the APR right now on Hyperliquid, and then there's the implied APR, which is the trading price of Pendle's funding rate.
For degen that just wants the simplest explanation, basically, if you long this, you want the 9.3% to go up. That's it, right?
Yes.
Yeah.
Or a different way to look at it. The underlying APR, or in other words, the funding rate of ETH on Hyperliquid right now is 10.95, and on Boros it costs 9.3. So, in other words, if you think it's going to stay at 10.95 forever, you long it, which means you're longing 10.95, which means you're paying 9.3 in exchange for 10.95. It's the same as if you see ETH price at 4.4 and then you feel like it's going to go to 5K. If you're long it means you receive ETH and you pay the price. And in this case, long funding rate, you receive the funding rate, you pay the price, which is 9.31%. Now, all this is percentage terms. I know it's weird, but the idea is you pay a constant stream of 9.31% APR while you receive a constant stream of 10.95% APR all the way until maturity. Assuming all of this remains, the 10.95 remains, what you earn is essentially similar to buying an asset that costs $9.31 and you receive an asset that costs $10.95.
I see.
Yeah. So correct me if I'm wrong, Dan. Like I'm still trying to grasp. So I'm just trading very small size to understand it. So I see this as a few outcomes, right? When I trade this, first there's two things that I look at. The first thing is, do I think the 9.31 will go up? Which is almost like when you trade perks, do you think this price is going to go up? Secondly, you can imagine as if the funding rate is a lot stronger, which means like if this is essentially the every settlement, which is 1 hour here, I can get paid in yield by holding this position. So either this stays flat, but I'm making this money. As I close, I make money on the yield side of things. Or this thing pumps to here and I can exit that position, which I win on my position. Or
yes.
Obviously you can do both. So you're actually trading two things. If this goes sideways, sorry, not sideline. I've been saying that sideline lately too much.
Sideline.
But
Yeah.
if this is a flat position and then if this goes sideways, you are making consistent yield here.
You're farming the delta. Yeah.
Yes. Bro, let's skip all the big words so people can get it. If this goes sideways, you're earning the yield here, which is I'm just going to say approximate 1%, settling 1% APR and settling every hour or so. And then if you can, and then if this goes up, that means you have earned the. Let's say if this 9.31 goes up to 12% because someone bought it, and then that means that when you sell it, you made like a 2 point something % on your whole position plus the yield here. Oppositely, this is the other way around, where if you longed it, you would have paid this much of yield out to other people, and if you exit it in the wrong time, you might have lost the price as well.
Yeah, I think that's all correct. But I know it sounds a bit complicated, but it's actually much easier than you think. The whole idea is you would want to receive more than what you pay. And in this case, if you long it, means you receive the funding rate while you pay a fixed rate, which is at the current price. And if you think it makes sense, you long it. If you don't think it makes sense, you short it, which is just the other way around. And then I think the confusing part is people don't know how much they can the P&L that they expect from this. Like when you say the difference between 9.3 and 10.95 is like 1.5%. Am I just earning 1.5% in APR? You're not actually, because in actual dollar terms,
almost 20%.
Yeah, it's much bigger. So like the total P&L that you can expect is basically 1.6% over 9.3%, which is roughly 17-18%. That's the total P&L, assuming this stays all the way, of course. So yeah, the P&L you can also sort of calculate the P&L based on the in percentage terms as well. So if you pay 9.3% and you earn 1.6%, that is about 17-18% profit, roughly.
Yes.
Yeah, so that's kind of how we calculate P&L.
If you're not calculating the yield, personally, I just pretend this is a new chart of a shitcoin that you want to trade. Is an $8 shitcoin that might go to $10. Then suddenly it goes to you a lot clearer. But in terms of the yield part, I right now I'm still using calculators to figure out if this goes sideways, how much I can be earning.
Yeah, we will have a calculator up shortly, just to help people visualize, how much your potential P&L is gonna be.
Wait, so just to still stay on this topic, right? Like you can see on the UI, the next settlement is in 40 minutes, right?
Yes.
Yeah, 40 minutes. So the settlement is hourly, and then like every hour you would get the difference, just like what Lambro is explaining, like that gap basically. Yes. And like how should they do that that math? Is it like, is it like the difference divided by like 24 hours? Like what's the math there?
Yeah, so I think things might get a little bit more complicated here. Lambros, if it's not, can you just click the notional size input and just input 100 YU? Honging. Yep. Now, just to go back a little bit, this is simulating how it will be when you open a 100 YU long position. Now, it sounds complicated, but it's very simple. What this means is 100 YU it means that you are receiving the funding rate of 100 ETH on Hyperliquid. So hypothetically speaking, this is the funding rate of 100 ETH on Hyperliquid. Now, that the stream right now costs 0.7 ETH. Well, which makes sense. That's basically, it costs 0.7 ETH to open this position.
Yes.
Now, but you're receiving 100 ETH worth of yield from Hyperliquid. Now, what you're exactly receiving in the next settlement will be the difference between what you pay versus what you receive. And in the box down below, you can see that you pay certain amount will receive 10.95% in the simulated box over there. And the whole idea is assuming the underlying APR remains until maturity, you will just pay this and receive 10.95% all the way until maturity. Well, if you pay 9.49 and you receive 10.95, you receive a net total of roughly 1.5. And then it's 1.5% off 100 ETH, scaled down to 1 hour, and then perpetually receiving that all the way until maturity.
I see.
If the cost of the funding rate is very low, let's say hypothetically speaking, the implied APR is 5%. Well, means you're paying 5% while receiving 10.95%, and then all the way until maturity, that's roughly about 2x profit if this continues all the way until maturity. Now, 2x is kind of like an easy way of saying it, but like if you look at individual settlement, just means you receive 5% in APR terms all the way until maturity.
I see.
Let's assume that I don't plan to hold it to the end. Do I just divide this by 24 hours and divide this by 365 days?
No. The long lit ROI here is just a very easy way for us to visualize the people. If you take max leverage and then this stays all the way until maturity, what's your ROI? But if you want to trade it, and if you swing trade it like within a short time frame, you can think of the percentage as dollars. So if it goes from $9.5 to like $11, how much would you profit? It works exactly that way.
Just is there a way in this UI that I can know how much I'm getting paid, assuming these numbers don't move right now in the next 37 minutes?
No, there's no way in the UI that you can see that, because frankly speaking, it's quite impossible for us also to predict what's the next funding rate is, and we don't want to mislead people on what
Right.
get paid every settlement. But if you do have a position open, you can see in your settlement history and like the history of the settlement. Historically, you open position at this price, and then the funding rate is at this price, and then you pay or receive a certain amount every settlement. But the whole reason why there's a difference between the implied APR and settlement APR is because everyone has a different opinion on where the funding rate is going to be average at from now until maturity. So that's where you make a decision.
Yes. Just for people who are starting to trade this, it was easier for me to just play around with random numbers and figure out how much of here, if that makes sense. Like, because the thing is, like, you don't know, you're not, like, right now I'm not sensitive towards how much is it 100 ETH at this rate gonna cost, so I just keep putting random numbers in to figure out how much ETH I'm willing to gamble. Like, let's say if I just want to do trade like 0.1 ETH, I typically just manipulate the numbers into the numbers that I want to. This might find it very stupid, but it's a good way to start off with. So let's say if I want to play 0.25 ETH, I'm just gonna to start my gamble, I typically just do click around like these and then just be like, all right, fuck it, let's just do this kind of thing. This is very stupid, but I'm very honest.
To be fair, I think this also goes to show that if you want to play with 0.25 ETH, you can expose yourself to the funding rate of 33 ETH. But and if you look at it the other way around, if you have a 33 ETH position on Hyperliquid and you want to hedge against funding rate exposure, you only need 0.25 ETH on BOROS to
I was just gonna get into that, but you've jumped. Yeah, so it yeah, like I can see how like basically with 0.25 ETH you are getting exposure to the funding rate of 33 ETH, right? So then in theory, like one of the bigger use cases that I'm sure this is gonna grow into is like for hedging. Like I think that's the more nerdy part that I would love to hear a bit more from you.
Yeah, for sure. What I would like to One, can you click the short rate button on the market, just on the top right there, just short rate. Yeah. So if you can see, short rate is pay the underlying yield, which is paying the funding rate, while receive the fixed rate, which is whatever it's currently trading, which is 9.3%. I know it might not make sense right now. Why would I pay 10.95 to receive 9.3%? It doesn't make sense. If funding rates can go down very low, and hyperliquid funding during the 10/10 Black Friday that happened just 3 weeks ago, a couple of weeks ago, went down to negative 200%. And in this case, you will be paying negative 200%, in other words, receiving 200%, while receiving a fixed rate of 9%, which is a good deal if it actually happens, if it actually goes down that far, again. But might not happen. It's a once in a lifetime thing. Now, I just want you to remember, shorting rate means you're paying funding rate while receiving a fixed rate. Now, as a question, what do protocols like Ethena or Resolve, where do they get their yield from basis trading? Now, they short on hyperliquid. In other words, they receive the funding rate. While if you open a short position on BOROS, you pay the same funding rate. If you just match those two positions, if you pay a funding rate and you receive the same funding rate, those two cancel out. That basically net zero. So what you end up with is you receive a fixed rate from BOROS. Now, if you look at the what we wrote in the short rate tab over there, that two line we just clicked just now, you pay the underlying or you receive fixed. So the net result is you just receive a fixed rate. The whole end game is for people who are basis traders to be able to see that, okay, I think funding rate is gonna drop in the next month or so. I better come to BOROS and short that rate and just hedge that funding rate first. And I can, if you do it on this market, meaning you've locked in 9.31% all the way until maturity. This means that regardless where funding rate goes, you can go to a negative 20, negative 30, negative 200.
You've locked the premium already. Yeah.
Locked in this fixed rate until maturity.
That's
kind of what we're trying to achieve.
Go ahead, sorry. Yeah.
And I think this one last point. I think we also go to show that if you want to short, if you have exposure to 33 ETH position and to hedge this, it only takes 0.25 ETH. And again, it only takes 0.25 ETH to open the position. BOROS natively also has the leverage, and leverage is pretty mild. In this market, it's only 2x. So in reality, you only need like 0.125 ETH just to hedge a 33 ETH position. So it's extremely capital efficient, and it's, I would say, a very marginal cost. That's a cost to open a position though, but in reality, once it matures, once it settles until maturity, it doesn't actually cost that much, because you're also, receiving a fixed rate in exchange for the underlying rate. So yeah, at the end of the day, it costs very, very little to hedge this rate on BOROS.
Taking a step back,
go ahead.
For most people that are using this to hedge, I'm assuming all the market makers, funding rate ARB guys already understood this. Is imagine you want to go massive long on BTC right now, and you worry the funding rate will go up. What you can do is actually you long the funding.
Yes.
You assume that let's say right now, right? I'm going to put an example in. I want a long ETH right now, massively long, but I worry about the funding rate. That's why. And you think the underlying APR is going to go up to 15% or whatever fuck, right? That's why you want to buy now. And so if the funding rate goes up while you hold your long and you don't want to close it, technically you're earning money here as well, right? As this goes up to here, as the blue line goes up to here, because you have locked in your position here, even if it goes up, you can get the difference, assuming there's a gap there, or you can sell this at a time to lower your funding rate cost at some point, just to let you know, as a directional trader, this is more likely what you're going to use.
Yes,
Amber is saying if he's size, right, and you long like 100 Bitcoin, and then you're like worried about the funding rate, then you can use this to get 100 Bitcoin worth of exposure. So you don't have to. Yeah.
And,
Yeah,
and
I
just for
think-
reference, right? If you're opening a 3 mil position, all you need is 0.7 ETH to kind of like hedge this long, assuming
Wait,
that
what?
like if
3
you're
mil,
opening
what?
a 3 well
400K.
ETH is 3.9 now. So it's 3.9 mil, I guess. If I
No,
want
no.
to hold 100 ETH,
Bro.
300
39K.
Oh,
39.
390K.
Yeah,
390K. Yeah, so
390K.
if you,
Yeah.
So which is quite cheap actually. Yeah.
Basically, it costs less than 1% of your capital to hedge. Well, it's not really cost because that 0.76 doesn't disappear. I mean, you can
Yes.
it
You can
settles
sell it.
slowly.
Yeah.
So it slowly settled into your position. So the actual cost is actually very little.
Yeah.
But yeah, I think
It's
you
like
brought up a
people
good point
saying that. Oh, sorry.
on
So
the hedging the funding long funding rate side. This extends beyond just directional traders. This also goes to say option underwriters when they have a long position on perp to hedge their underwriting positions from the option side. They're very exposed to funding rate payments, and this is also a platform for them to hedge on the long side.
yeah, for sure. Personally, I would be very. I know it might be down in the line in the roadmap, but like once there's a little bit more out on this, this will be something that can be very impactful and more retail understanding, in my opinion.
We are pretty
to use.
close to getting there. So Sol and Hype funding rates are in the pipeline right now. Not so soon, but not so soon in crypto terms. But yeah, we're not far from supporting one.
These like oracles
Not
are
so
like
soon,
from
crypto
the
terms.
centralized exchanges, right?
Sorry, Marco.
So like the oracles for the funding rate data is from like the each individual market, right? So like for Binance, from Hyperliquid is from Hyperliquid.
There can be third-party oracles for this too.
Okay, got it.
Yep. But if you notice, I'm sidetracking a little bit. All we need to trade a funding rate is just an oracle for that rate. So
Yes.
technically, we are not really constrained to funding rates. We can trade anything with a percentage number.
Yeah.
So yeah, it can be T-bill rate, real estate rental rate, LIBOR rate, or even MIT acceptance rate. Anything
Yeah.
with a percentage number.
I think so. That's right.
We can support it there.
Wait, dude, I just want to go back a bit. Sorry, I know this was like earlier on the example, but just want to make it very clear to the audience. Like, so you're saying like folks like Ethena, right? Like they make the yield because they long and they because they short. They get the funding rate from that. They get paid. So what happened is that like let's assume like ENA is still very small and they only have 100 ETH worth of exposure that they have to hedge. So like if they then go to short rates here and buy 100 YU, then they lock that. Even if let's say like suddenly tomorrow we like dumped like crazy, and then the short rate flips, right? That's sort of like the logic here.
Yes, Lambros, I think you can look at, yeah, exactly. You're in the tab that I need right now. ETH funding rate right now is -5%. And if you're on the short side, you're now paying the yield. So you can actually hedge that on BOROS right now and flip that into 5.07%. Well, the reason why the implied APR, or rather what it costs on BOROS right now, is 5.07 because funding rate don't really stay negative for that long. So in general, 5% is what people right now roughly expect funding rate is gonna be all the way until end of November. So yeah, which is why you see the funding rate stays at 5%. Now,
Yeah,
I will need a caveat as well. The past 1.5 month-ish has been, I would say, one of the more odd times for funding rate. You don't really see funding rate go negative that often. So we are in quite of a weird spot in the market right now.
Yeah, that's why you see like USD supply, I think, has gone down by like 5 billion or something. But yeah. Okay, makes sense. Yeah.
Actually, so I wanted to jump into a little bit in trading insights. So right now I'm actually trying directionally trade this. I'm actually looking at this market this morning. First off is like, I don't know. First is that, okay, before directionally trading, is there a way I can ARB these two?
Yes, but it's
assuming they'll converge.
It is not as easy as you think. Let me put it this way. Let me put it this way. You can earn the difference between the two, and it's completely delta neutral. And how it works is, remember when we say you can achieve a fixed yield of 9.31%, and you can also hedge the funding payment of 5.07%. I mean, that's the whole caveat. Now, what I'm doing, what I'm trying to do here is long, in this case, long ETH on Binance, long ETH funding rate or long ETH YU on BOROS, and then short ETH on Hyperliquid, and then short ETH YU on Hyperliquid. Now, just stick with that. Now, the long ETH on Binance and long YU on Binance on BOROS means you're paying fixed funding rate. Short ETH on Hyperliquid and short ETH on BOROS means you earn fixed funding rate. Now, the short ETH on Hyperliquid and the long ETH on Binance means you are delta neutral, which means all of this is a delta neutral fixed yield position. In other words, it's just fixed yield all the way until maturity. Now, if you add in the leverage that you can take from Hyperliquid and the leverage that you can take on Binance and the leverage you can take on BOROS and how cheap it is to hedge it on BOROS, with like, let's say $10,000 position, it can be extremely levered up and you can earn quite a big APR from just fixed rate. We built a calculator. I don't mind sharing with you guys later on how these numbers actually work. But given the difference right now of about 4.3%, this can translate to about roughly around 50% in APR, assuming you take leverage. But that also means that you have to rebalance your position carefully because, you know, if you take leverage on Hyperliquid side or Binance side, the price movements can liquidate a position. Because your net portfolio is delta neutral, but still you have to manage your risk properly. But if this is automated, this is something that can be arbed technically. We do see quite a few smaller wallets experimenting with this, but we haven't really seen people execute this on a large scale yet. And I know that was a little bit complex, but the whole idea is delta neutral and fixed yield from funding rate, because BOROS can achieve fixed rate, and then you can just delta neutral the Binance and Hyperliquid positions. Yeah, that's the whole idea.
Understood. Yeah, that was what I was thinking as well. Okay, directionally trading. So like I wanted a long YU here basically. I wanted a long YU here, but the thing is, I'm like, bro, like I feel like this is obviously first I'm gonna lose some money out. I feel like the implied and the underlying it's a little bit off basically in general right now for me. So like I don't know when will I haven't traded enough to expect, okay, trust me bro, in 2-3 days the blue line will go above the bar chart. Like I don't have that sense yet, so I don't know when and how to buy the dip or the turning point kind of thing basically.
Yeah. So the challenge is at the end of the day, you have to understand funding rate to some extent. And if you see funding rate enough, start seeing some sort of pattern, and or maybe you can dig through historical data to understand funding rate a little bit better. And 5% for a month probably is a good deal. So this is a place for you to long. Or maybe you're bearish in the market and you think it's going to stay negative. Yeah, shorting might be a good idea.
The thing is, I am not, in a way that I'm almost I'm not betting against the funding rate, but I'm betting against the other traders on BOROS on their view on funding rate though. That's the thing. Like if that you look at this, sorry?
No, I was just saying that could work too.
Like if you look at this, right, the difference in here and here is so massive in comparison to I guess this is because it's earlier, but
it's a new market.
Yeah, I mean I feel like
okay, the difference makes sense because Hyperliquid funding tends to be much higher than Binance. Binance's funding rate tends to be a little bit lower because there's much more short pressure on Binance because the basis traders tend to be on Binance and not on Hyperliquid. Ethena, for example, have zero pressures on Hyperliquid. So there's a much bigger short pressure on Binance side. Also, the tend to be more on the degen Hyperliquid, and so for Hyperliquid funding tends to be higher. So if you notice historically, ETH funding rate on Hyperliquid have broken past the 10.95 barrier quite a lot. Well, this market is pretty new, so you don't really get too much of a historical data, but in general, ETH funding on Hyperliquid have gone past 10.95 before. If you go to the one-day maturity, October maturity, that's BTC.
For ETH.
Well, yeah, I mean, you can see for BTC, it just went past 10.95 anyway. But if you go on ETH, Yeah, that one.
Sorry, bro.
No, all good, all good. Yep, and you can see that. Yeah, it went to negative 200% before, so the chart looks wonky.
Oh shoot! Yeah. Wow.
Yeah, but you can see that historically there have been times where it shot past 10.95. Just for context, why is 10.95? It is actually Binance's anchor funding rate. Binance funding rate settled every 8 hours, and it's 0.01% every 8
I
hours.
see.
If you annualize that, that is 10.95%. Yeah, that's why the number is a bit weird.
Hey, by
Yeah,
the
you
way,
have to really know the mechanics of it. Yeah.
Yeah, I mean, if you're a perps trader, and you tend to be quite familiar with funding rates, so
Yeah.
which is quite a large portion of crypto participants, I would say.
yeah. Okay. Let's move this a little bit on to something else. Like, what impact does this have in, like, let's say if I'm not a funding rate trader, which I'm sure a lot of Pendle holders are not, points farmer, points whatever users, and likely not going to use BOROS as well. How should I think about this in terms of, like, let's say revenue numbers, protocols, or traction, etc.?
Interesting. I'm just gonna give a bit of context before before diving deep into what you asked. We've reached about one. Was it 1B? We've reached 1B in cumulative trading volume. In For Pendle V2, took about 1.5 years, I think, for us to get there, approximately. I think. For BOROS, took us about 1.5 months. Yeah, it's a big difference, and the revenue at the same it also scales about the same way. Right now, it's very, very small compared to Pendle V2, but in terms of growth, it's much, much, much faster. It's about 10x faster than Pendle V2's growth at the moment. So, it's pretty healthy, I would say, for now. Definitely a lot of room to grow, but given the nature of the product, I think we are on to something here. Swaps are generally the most used product for people to hedge against floating rates in finance in general, and we are just replaying the same playbook in crypto. Everyone wants some level of certainty, and I think we're here to provide that, especially in a world of insane uncertainty and funding rate being so volatile. And yeah, BOROS is here to, like, hey, you can hedge this. Yeah, and that's where we come in. And the whole goal is, at the end of the day, BOROS is a product by Pendle, and yeah, all value accrual will result back into Pendle token. Well, there will not be any BOROS token because we are a Pendle product. It's like, YouTube to Google, and like all the alphabets product for Google, sort of.
Got it. It's
Nice.
cool.
Okay. Do you think there might be some tokenomics change, etc., to boost BOROS usage? Because I feel like right now they need a little boost, basically, in my opinion.
Yep. We don't have it yet. We have maker order incentives. Well, I can see the top right corner there. It's basically an incentive for you to put limit order to play around. If people know how to market make, this is a pretty fun reward to farm. But yeah, nothing much at the moment. We are open for that. But I think given the nature of the product, I think it will more likely to be more organic growth rather than very incentivized growth. I think the use case is definitely there. I think it's a matter of lindiness and us educating users on how to play this game. So far, the growth that we've seen have almost all been sort of organic growth. So yeah, it's been pretty healthy for us, and we want to keep it that way. Regarding tokenomics change, though, I think we are exploring that, but from a different perspective. I think we're looking at it in a way that, at the end of the day, we want Pendle to be the main beneficiary of all the success of Pendle products. And currently, we have vePENDLE, which is currently serving Pendle V2 as a product. BOROS, I think right now, it's not really that relevant within the Pendle V2 tokenomic landscape, and we kind of want the value accrual to flow back to Pendle token one way or another, given the big revenue potential that we have on BOROS. How it's gonna look like, I don't think I'm in a position to share yet, but I think you should expect value to
give us some hint.
just expect value to flow back to Pendle holders. That's what I want to say. Yeah. So given I'm also a very big Pendle holder myself, so we want Pendle to do well. I'm gonna leave it at that. Yeah.
Nice. You know what the funny thing is? Like, Pendle is probably one of the most bullish. Pendle is probably one of the most bullish DeFi tokens I have, but yet I don't have all of it staked for some reason. I think it's the PTSD from the DeFi summer days, and then the fact that when I lock it, I can't like wait for 7 days to unlock it. Where when I commit, I have to commit like X amount of days. And
yeah, I want to shed some light into what you just mentioned as well. I think it's the same concern that most liquid funds have. They can hold Pendle token, but to get benefit from the growth of the protocol, they have to stake in vePENDLE. And most funds have mandates from their LPs to be able to withdraw. And obviously, vePENDLE, you're locked in and you can't withdraw. I think we've grown past that stage where we have to rethink a little bit more on how to cater to everyone, not just those who lock vePENDLE. I think BOROS is a pretty good start for us, given it's a completely new project, and assuming it can get to Pendle V2 stage, we're basically doubling our revenue. Well, assuming that's a big assumption, but yeah, and then we'll see where that goes. And our goal is obviously to cater to all Pendle holders, not just vePENDLE holders. So there might not be a change, but it's something that we are really heavily thinking about because it is a concern that a lot of people have brought up. A valid concern.
This is one of the best conversation I was expecting and hoping. Like you, Dan is normally very composed as well. Just the whole fucking Pendle team is like that. So it's rare to get these kind of stuff out of them. So I'm happy. I'm a happy man. Normally I'll push more, but I guess I don't need to push more.
No, I think it's about time for us to care a little bit more about the tokens. We generally don't focus on the token. We focus on a lot of the product. But I think it warrants for us to look into it when our PE ratio is 5. It's better than most traditional stock companies out there. Yeah, I think there's something to be fixed there. Yeah, again, PE ratio it's low. Yeah, for
sure. Yeah, it's like it's like the trifecta of DeFi, and then the 5 PEs.
Yeah, it's ridiculous for sure. It's about time for us to revisit it. As much as I don't like to work on it, it's something that needs to be looked at, especially when a lot of our LPs are also asking the same question. We have to look into it.
Nice. Okay. I know we've taken quite a bit of time, coming to the end, there's 2 questions. So first, is there any questions you want to ask us?
For me, I would like to host potentially a campaign with your community, actually. A trading campaign on BOROS. Still exploring, but I think it's more like a siloed campaign just for Lambro. But I think it is something for us to explore down the line. Yeah.
I think that's something for sure to do. Like, the thing is, like, because there's no, obviously, like, I like Pendle because you guys don't launch a token for every single product, but at the same time it's like, oh, there's no airdrop, there's no like exponential game unlike Points Market, right? I don't like, why would I want to spend time and lose potentially like some money to learn this, right? But if it's like, oh, there's an airdrop, there's extra, then you want. But actually, like, since I started posting about BOROS more, people were asking me like,
We'll consider the mechanics first. We have a campaign going on. Well, I'm not sure if it's appropriate to say this, but we have a campaign going on with Dojo's community for now. I think we'll take some learning points and then perhaps something we can explore with your community as well. Will be fun. Yeah, exact mechanics. I think we'll take some learning points first before heading over to yours.
That's good. Okay, like, there's a question that we ask every guest. It's, what do you think is required to make it in crypto?
Survive, I guess.
I love that answer. Like, never zeroed out. Yeah, survive.
Yeah, don't die. Well, in the crypto sense, don't blow up. If you notice, all the protocols that are, I mean, I'm extending this to protocols, but I think there's a big parallel to draw with individuals as well. All the protocols that survive were not the biggest at the time. If you're OG, Aave used to be Ethlen. They were nobody, and when they became Aave, they had Compound, which were much bigger than Aave, And the goal again is just survive. They were not the shiniest thing, but no hacks, no listing of degen assets. Just stay calm, just survive. Yeah, I think a lot of this, you can also draw a lot of parallel to a lot of crypto participants as well. A lot of the OG crypto guys are just surviving. And I think we're here also as a crypto participant because they love the industry, and naturally, well, we're here because we think the industry is going to thrive, and just by the virtue of surviving, you will benefit from the growth of the industry. So just survive.
The win is behind your back.
Don't go insane with leverage, and don't blow yourself up.
All right, this is
Yeah, I
actually
think that's
There you go,
that's
Lambro.
advice.
Stop trying to make it in one trade, Lambro.
Yeah.
Bro, all right. Thank you very much, guys.
All right. I think that's it that we have. Again, thanks for your time, Dan. I think it's going to be exciting to explore some of the things that you mentioned.
Yeah, sounds good. Thanks a lot for having me.
All right. Thank you, guys.
I will stop the live. Cheers, all. Thanks.
Cheers.